So last week on Millennial Money, Graham Stephan, he tells us a story about how he had a monkey pick stocks out of a hat last year, and he got it all on film and everything, and this monkey ended up outperforming the S&P 500. Yes, a monkey literally reaching into a hat, just picking out random like notes that had a little nut in it or whatever, right? A little treat for the monkey, picking it out, and it outperformed the S&P 500. It's like, wow, that's impressive. A monkey outperformed the S&P 500. I have this stock account. It's my dividends only account. I give this account less than 1% of my attention, okay, in regards to any of my accounts. Like, I don't even care about this account. Like, it doesn't even register to me, okay? And look at this account. I mean, it is absolutely amazing. Foot Locker, JP Morgan, JWN, Pfizer, Qualcomm, Tapestry, Walgreens. I mean, it's doing amazing. It's up $73,000, it's up 71%. That doesn't even count for all the dividend money received in all these different stocks, right? And I don't even work at this account. Like, literally, I just pick some stocks that are like, oh, this is a pretty good dividend stock, for the long term. I just put money in these dividend stocks and just hold them. And yet, look at it. It's doing so dang amazing, right? And I'm like, I never care about it. And then here I am putting in all this research work, right? And I got Smile Direct Club down 20% now. I got Tattooed Chef down 16.5% on this one. I got Honest down 33,000, down almost 9% on Honest, HNST. I got Planet 13 down over 8.7% on this stock. And it's like, wow. I'm putting in all this research work. I'm reading all these 10Ks, 10Qs, listening to conference calls, investor presentations, spending all this time keeping up with Google Trends, blah, blah, blah. All this time for this? For this? And then you got a monkey over here picking stocks and outperforming the S&P 500. I got my dividend account, which I don't even care about, just doing amazing. And I'm like what? Like what? This is really going on, right? You look at Apple stock. Look at Apple stock. I mean, look, the year to date's amazing on the stock. It's the biggest company in the world. Like, literally, could just throw in money in Apple stock and look at it. It's done amazing. It's worked out so well. I mean, the stock was $130 entering the year. It's $180 now exiting the year, right? Absolutely tremendous. S&P 500. Look at the S&P 500 the past 6 months. Well, I've been loading up on all those stocks. I just showed you the past 6 months, right? There you have the S&P 500 over the last 6 months. It's been a beast. 4,200 it was 6 months ago. Today, almost 4,800. So it's going to exit the year somewhere around 4,800. Like, isn't that amazing, right? And literally could have just put money in an index fund and got that gain versus picking these stocks that are down, 8%, 12%, 20%, whatever, right? Over the past 6 months I've been flooding money into. And so that leaves me in the situation, right? Or as you as an investor, and you're kind of like, what is going on here? Like seriously, why do I put in the work? Why do I research when these stocks are just going down, right? And I think all of us as investors go through these sorts of time periods when you start questioning yourself and you're like, really? I could have just put money in Apple stock and made all that money. Could have just put money in the S&P 500 and made all that money. Could have just had a monkey pick stocks and made all that money. And I'm putting in work, real time, dedicating a lot of time. I could have just been watching Netflix or whatever people like to do. I don't know, play video games or whatever, right? Wow. Isn't that something else? Isn't that something else? Dang, man. Isn't that something, right? Well, the truth of the matter is, you're not going to get these sorts of gains having monkey pick stocks, and you're not going to have these sorts of gains if you are investing in the S&P 500. The fact is, when you're playing this game, you're going to go through these down periods, these droughts. Let's call them that. Okay, a drought. It's like if you're a stripper and you don't have anybody coming in throwing a bunch of ones. You're in a drought, right? Future said, I thought it was a drought, and you're going to go through these droughts in the stock market where you're down 6, 12, 18 months, whatever, and you're just and meanwhile other people are having success, and you're like, wow, I must suck. I blow at this game now. What happened to me, man? Oh my gosh, right? But the truth is, going those different strategies, you're not going to get these sorts of gains in stocks, right? You're not going to get an Alpha up 300+% in a few years. You're not going to get a Tesla up 2,200% investing in the S&P 500 in a matter of a few years, right? You're not going to get a 400% plus gain on a Revolve. You're not going to get these sorts of gains messing around in the S&P 500, you're going to get gains. You're not going to get these sorts of gains having a monkey pick your stocks. You're not going to get these sorts of gains from Apple stock, just flat out the God's honest truth, right? This year, I shouldn't make any more moves. We only got one trading day left in the year, and I shouldn't make any more moves. So this year, I'll end up at profit at $463,000. I can tell you those gains wouldn't have come if I was in the S&P 500. I would have had good gains in the S&P 500, but I wouldn't have had that level because a lot of those stocks I sold this year were up, hundreds of percent, and some maybe even have been a 10xer, right? And so this would have never been possible, this sort of year I had where I still profited $463,000 without essentially investing in the type of stocks I'm investing in, right? Now, with a lot of these stocks that I've gotten these tremendous gains on, there were a lot of down periods, right? There was a lot of time periods where those stocks weren't doing great. And they were downtrending for, significant amounts of time. Tesla, the first year of the stock, I was in that stock for a year, did nothing. It actually downtrended. And obviously I had to hear how much of an idiot I was and all those sorts of things, right? Revolve took a little bit to start really working out. Upwork was a ridiculous gainer. I think that made us 300 or 400%. That one took a little while to start to get into gear. ELF started hitting pretty quickly with that one. But a lot of these stocks, they take time to play out. And I think that's the biggest thing for a lot of folks watching this video right now is understand a lot of these stocks. It's a great saying, I heard it once. It was essentially the road to Easy Street goes through the sewer. The road to Easy Street goes through the sewer. And that best describes the stock market many times. It's not all smooth sailing. It's not all peaches and cream, and it's just up, up, and up, right? If you really want to get to the good stuff, you have to go through a whole bunch of crap, okay? I've never met anybody, I've never known anybody, and I've been doing this for a long time, and I know a lot of people that have perfect track records and go through it's just up every year. They're just, wow, I just make so much money every year, and I'm in all the perfect stocks and things like that, right? You're going to go through these time periods when your stocks aren't hitting it, when they're not clicking, and you're buying in, they just keep downtrending. You're like, oh my gosh, right? Now, the beautiful thing is with these particular stocks is you don't even need them all to hit. That's the most amazing part of this. As long as a few are hitting, when they hit big, you make so much money that if the others don't even do that much, or even let's say some of the other ones downtrend, you made so much dang money from one of them that it doesn't really matter. Now, me personally, I like to hit 90% plus, meaning 90% of the stocks I invest in, I need them to make money over the next 3 years. Not downtrend, go up over the next 3 years, right? And then over a 3 month, 6 month, 9 month, 12 month period, it is what it is. But in terms of over a 3 year period, I need them to go up, right? But even if I wasn't at 90%, let's say hypothetically, as long as just a few hit, it is such a game changer for your portfolio when you can hit those multi-bagger stocks that it just you get so much better of an ROI versus doing anything else in the market, right? Now, not everybody knows how to find the next multi-bagger, and you're going to have to take some risks to find those multi-baggers, right? Tesla was a big risk for me. That's a 2,200% gainer for me, right? That was a big risk. Let's be quite honest. There were some folks that, when I was investing in Tesla, there was some folks out there, professionals, that are on Wall Street that really were convinced Tesla was going to $0, meaning I was going to lose every penny I invested in that stock, right? There was some folks out there that thought that. Some folks out there that thought it was overvalued when I started buying that stock, right? And so, I had to listen to all that. I had to go through all that. I had to hear all that and how much of an idiot I was and blah, 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 right? And like I said, to get to Easy Street, it goes through the sewer. And that's just the honest truth in this whole game. And so when it comes to all these stocks that are my newest group of stocks I've been investing in for the last 3-6 months that have just been downtrending, right? All I need is a few of those to hit. All I need is really one of those to hit big. And it's going to make so much gains, it's going to be ridiculous, right? The amount of money that will be made from those is going to be astronomical. And if the other ones just do okay, I'm still good. Now, if all those hit, which I think there's a high probability all those are going to hit over the next 2 or 3 years, then I'm in a situation where, the money's silly, right? But I don't even need, that's the best part is I don't even need them all to hit. If just Tattoo Chef hits over the next 3 years, that makes more than all the other ones, right? If just Honest hits big over the next few years, and that's also a $20, $30 stock, and the other ones just do okay, right? The other ones could even underperform the S&P 500 as long as that other one hits it huge. the gains are insane. And so I think that's something very important to kind of keep in mind when you're in this sort of market, because you can start feeling real stupid real fast, right? And then when you're going to have family members, friends, random people on the internet, whatever, saying, you know, you're such an idiot, you should have just bought the S&P 500 or had a monkey pick stocks or just put your money in Apple, right? You start second guessing yourself like, oh man. And then when you're putting in the actual work to do it, right? And you're grinding, you're like, oh, I'm doing all this work, I'm putting in all this research, I'm trying to stay disciplined, you're doing all that, and then you're not getting the money back for it right now, you just end up feeling like an idiot, right? And especially if you're newer to the market, it can really take a mental toll on a lot of folks that are new to the market, because they just start doubting themselves, and then a lot of folks end up selling, right? And that's unfortunate. That's all I'll say about that. That's unfortunate, because you never get to really see, you know, the real run. And even that happened to me a lot of times in my first few years of investing, where I would go through all that crap. I would finally make a little bit of money in the stock, and I would sell out and I would run, because I'd been through a lot of crap, and I was just so happy to just made a little bit of money. And the biggest thing I learned is when you're investing in these sorts of companies that have huge long-term visions they're going after, in execution they're going after over the next 5-10 years, you let those babies run. You let them go on a massive run. Because if you're right and what you were doing was right, they're going to go on a massive run. Meaning it's going to make you hundreds of percent of ROI, if not 1,000% plus. And you got to let those babies go on their run. You don't take the profit after you made your first 20%, 30% or something like that. That's going to leave you real frustrated. That's all I can say about that. And there's plenty of stocks I did that in the past where I made 20, 30%. I had went through 6 months, 12 months of a hard time and all the short seller attacks and all the crap. And then I finally made a little bit of money and I cashed. All to watch that stock, triple up, quadruple up from there. And I was like, why did I cash so quickly? Because you had to go through so much pain that you're just happy to take any profit, right? And all along, the big profit was really coming over the next 6, 12, 18 months, and you weren't there to collect that big profit, right? So anyways, guys, hope you enjoyed a little video like this, a little bit different, little psychology today. I think these psychological videos are needed every once in a while, especially in this sort of market. Whenever you get things out of whack in terms of downside for stocks, particular stocks, or upside, I think that sometimes you need to talk a little psychology. So anyways, guys, much love as always. And don't forget to subscribe to the channel if you're not subscribed already. It's absolutely free to do so. Be notified every time I drop a video. Hit the notification bell, or whenever YouTube wants to notify you. Hope you guys enjoyed. Peace.